let's take a look at the format of the journal entry form. Okay, so it's just going to be, let's do it as of 1/18. That's fine. It's going to give me a number. These are pre-numbered, but they're usually pretty good to have just let the number sequence do what it does. And then we're going to increase and decrease with debits and credits. So this is the good old debits and credits. This is your good old T account. If you had accounting and from a textbook kind of scenario. Now, if you don't know which way goes up, debits and credits, like which account's going to increase and decrease, we have other courses on that if you want to take a look at that. But obviously, if there's only like 2 accounts impacted, you can record it and see if it went the wrong way, and then you can reverse it, right? You can adjust it. But let's do a common transaction that might be, let's say you finance equipment. But you get a loan for it. So now I'm going to put property, plant, and equipment. Let's say equipment. I'm going to make a new account. Equipment. I'll just add it. And I'm going to say this is going to be a fixed asset account. And we're going to say fixed asset. I'll just put furniture. I'm not too worried about the sub account. And then the cost, original cost, I'm not going to put that there because we're going to add that. So I think that's it. Let's save it. And let's say we bought the equipment for $10,000. That's how much it cost. So we financed the equipment. And then we're going to put the other side into loan payable. So loan payable. So notice this one would typically qualify for something that we might do with a journal entry because buying equipment doesn't happen all the time. Therefore, there's no standard form for the purchase of equipment. There is for like inventory, right? Because that does happen all the time, or the buying of supplies or something like that, but not typically for equipment. And we didn't pay cash for it. We didn't put it on a credit card. We financed it. We took out a loan for it, and therefore we would have the credit. Now, I just want to also point out that if you're on the accounting and bookkeeping side, if you're a bookkeeper in particular, your goal might be that you want to automate things as much as possible. So I just want to point out that a purchase like this, like equipment, could get quite complicated because you might have a trade-in of the equipment, you might have a cash down payment that you made, and then the loan that's going to be involved within it, which means that you might have depreciation on the trade-in and all that kind of stuff, which means that you probably would want to then contact the CPA firm because they usually have the depreciation schedules at the minimum to help you to record properly the transactions and put the loan on the books. However, because the depreciation schedules for tax software are only really recorded on like an annual, they record generally annually, so you can kind of figure out in the middle of the year what's going to happen and so on. But it might even be easier. You could come up with a system and say, hey, look, I'm basically going to record everything on a cash-based system. If I purchase and finance equipment, I'm just going to put the amount on there that I actually paid for the equipment, staying on a cash-based system, and then provide all the information necessary for the accountant to do the adjustments at the end. So at the end of the year, you're going to tell them, I want you to look at the purchase agreement and put the equipment on the books properly, which I spelled wrong apparently, and then put the trade-in on the books, record the proper amount of depreciation all at the same time. And that sometimes is actually easier to do because if you put the trade-in incorrectly or whatever, it's actually harder because then the CPA firm has to reverse what you did and then do it again and then figure out the difference for taxes. So I'm just saying it. So I just want to say that if you buy equipment and you have a complex transaction, if you have anything that's deviating from a cash-based system, you might want to think about from the accounting side of things, can I just record it kind of like I'm on a cash-based system? For example, with the loan as well, I'll just pay the loan payments when they become due. And then at the end of the year, I'll let the bookkeeper or the tax firm or the CPA firm put the loan on the books, record the amount of interest expense properly, break out the short-term and long-term portion of the loan. We'll talk more about that later, but I just want to point that out here. So let's go ahead. So down below we have, of course, add lines, cancel, clear, make it reoccurring. If we have a reoccurring transaction, save it. save and new or save and close. I'm going to go ahead and save and close it. So then I can go into the reports, run it. So now we're going to say, did I run it? Did it run? I was running. Why? Because Jenny told me to. And so here's our equipment. There it is, 10,000. If I go into it, it didn't do it. Dang it. Refresh it. Let's go back. Run it again. Don't be all, we're going to go down equipment. Let's go into it again. Otra vez. There's the 10,000. It's a journal entry form that we put on the books within. So if we go into it, it takes us into that journal entry form. Let's close this back out. Go back up, back to our reports. The other side is in the loan payable. If I go into the loan payable, we're going to say it didn't do it again. We're going to go back. QuickBooks. Stop being stupid. I think this only happens with the test version for some reason. Sometimes it gets a little glitchy. Now, where was I? Loan payable. We're going in there. There's the 10,000. There's the journal entry. So it went to both sides there, and that's how the journal entry is going to work. So notice that from a debit and credit standpoint, we debited the asset account, which increased the asset, and we credited the liability account, which increased the liability, because liabilities have a credit balance. If you do the same thing to it, it'll go up, is the general idea.